Welcome back. You're watching The Money Show with me, Kavita Thapliyal. This is the last leg of the show where there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Aditya Shah, Chief Investment Officer, GST Investment. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. So, good evening, Aditya. Hi, welcome to the show. And we have our first viewer on the call, Kiran from Solapur. Hi, Kiran. How are you doing?
Hi, Kavita. I'm good. I hope you two are.
I'm good. Thank you so much. All right. So I think you have sent.
My query.
Yeah. We have. So 1 crore in 10 years using 20,000 SIP, right?
Right. I have a supplementary question as well, actually.
Okay, tell me.
That's more related to the investing strategy. Like, if we, try to choose some of the growth mutual funds into our portfolio, in order to balance it, should we have value funds as well? And if yes, what would be the suggestions for value funds as well?
Interesting. So as far as your question is concerned, you really sound like a learned investor. Do you track markets? Do you track strategies adopted by fund managers?
No, I'm kind of, the new learner now, trying to follow it, reading few articles, slowly growing my knowledge over it.
So this is your first investment in mutual funds?
Yes, like I recently started. I have only one large cap fund with me right now.
Okay.
That's Canada Robeco Blue Chip, but because I am willing to spend some 20K per month.
How much are you doing already, Kiran? How much are you doing already?
Currently, I had started with 10K.
Okay.
But I can rebalance that as per
So 10K in just one fund?
Yeah, in just one fund.
So that makes
it. But I'm trying to change it or alter it.
Sure.
For a particular goal. Yeah.
So in all, I can take it as a 30,000 investment per month. Because if
it's 20. Like that 10K including.
I'm including the 10,000 earlier, which is going on.
I will rebalance that.
Yeah. Because Aditya might want to change that fund also. All right. So 1 crore in 10 years, Aditya, what should be the investment amount?
Ma'am, 20,000 rupees invested for 10 years will not yield the investor 1 crore if I assume a 10% nominal return. So the investor will have to do an SIP of minimum 40 to 45,000 to reach his goals. If the investor is unable to increase his SIP for now, suggest increasing the SIP in phases of 10% and pushing the goal back at least to 15 years. That may help him achieve his goals with a 10% increase in SIP. Now, what funds to really invest in? I never suggest large cap active funds because 90% of them underperform even for a time horizon of 10 years. So I will suggest on the large cap side, go to a UTI Nifty 50 index fund. For the 20,000 rupee SIP, the investor can invest in a Parag Parek Flexi Cap fund, a UTI Nifty Next 50 fund, and a Kotak Small Cap fund. So these 4 funds, SIP them consistently, split the SIP equally into all of these 4 funds and push your time horizon at least from 10 years to about 15 years, and then you may be able to achieve your goals. So consistently and in a disciplined way, these SIP.
Else you want to ask, Aditya?
Sorry, ma'am, I couldn't hear you.
Kiran, are you still there on the phone line with me?
Yeah, I'm there.
So anything else you want to ask? Because one thing is clear that you will have to increase your investment amount. The kind of funds recommended. Yeah. Anything else you want to ask?
I think that's it. Yeah.
All the best. We move on. We have Ajinkya from Pune. Hi, Ajinkya. How are you doing?
Hello.
Hi, Ajinkya.
Yeah, good evening.
Hi,
I'm doing well. Thank you.
Thank you so much for sending us your query. You can ask your question to Aditya.
Yeah. Right?
You want to move out of the sovereign gold bonds?
Yeah, it is. It's regarding the SGB bond investment, which I had done with SBI. Maybe I don't know, it's a part of the question to be taken in some episode. But is it a right investment, and should I stay in it or should I on hold? So I just want
Do
to-
you need the money?
Not, but then is it a good investment to be kept for those many years, as the locking period is for years and it could be released after 5 years?
See, right
That's a
now, if you
long-term,
talk about
one.
right now, if you talk about investment options in gold, sovereign gold bond is one of the best. Yes, it comes with a caveat of 8 years of lock-in. If at all you're stay put, it's very good. Otherwise, you can have a partial withdrawal after 5 years. But that too, I'm sure even Aditya would suggest, if it's not required, you should not do it. Aditya.
Definitely, ma'am. One of the best investments in gold, as you said, continues to be through sovereign gold bonds. Here, if you are able to hold it for maturity, you get 2.5% interest, and on top of it, all the capital gains that you accrue because of appreciation in gold prices are all exempt. So, my opinion is, if the investor has a long-term view and wants to stay invested in gold, he can continue to hold. My another suggestion would be, before you buy any product, please do research and only then buy the product. Do not think after buying the
कि
product what
अभिषेक
should I
तुम्हें ये
do.
लोग
So, in my opinion, hold on to this product if you have a long-term view. If you have a short-term view and if you require money, then you can think about redeeming. But my suggestion will be, don't do that.
All right, Ajinkya, is there anything else you want to ask Aditya?
No, not really. This is the last thing. I didn't hear you properly. Should I keep it? Is it holding a good option? Is what was being said?
Yes, that is what even Aditya is recommending.
Okay. Thanks indeed.
All the best. We move on. We will take Guru's question, and he says that he's been invested in mutual funds since 2017, and he wants to understand if he can still keep investing in the funds that he's mentioned. He has Aditya Birla Sun Life Pure Fund, HSBC Small Cap, Nippon India Retirement Fund, and his goal. Okay, he's not mentioned anything about that, not even the amount of SIP. So we really have limited information. How can we help him, Aditya?
Ma'am, first of all, congratulations to the investor that he's invested in mutual funds for the last 6 years. That's very good. The investor seems to be investing, seems to have a very high risk profile. Therefore, he is invested in a small cap fund, in a pure value fund. I will suggest to continue with Aditya Birla, a pure value fund, HSBC small cap fund. But I will also like him to introduce a flexi cap fund. A flexi cap fund will balance the risk. A Parag Parek flexi cap fund or a Canara Robeco flexi cap fund will do it. He should move away from Nippon India Retirement Fund into that fund. It should be really okay.
All right, let's move on. We have our next viewer on the phone line. We have Raman Kumar from Uttarakhand. Raman, hi, good evening. How are you doing?
Hello, madam. Very fine. How are you?
I'm doing good. Thank you so much. You have a debt mutual fund portfolio and you've completed 3 years also in it, right? You have DSP, Corporate Bond Fund, Axis Banking and PSU Bond, IDFC Short Term, HSBC Triple Ace Bond. All right. And you also have a few funds where you've been investing since last year. Baroda Conservative Hybrid Bond.
Hybrid, madam.
Okay, Canara Robeco Conservative Hybrid. So what is exactly, you want to know what to do of this portfolio?
Yeah, madam. And yes, I want to be. And basically, the return on the conservative are very low, 1 to 2% only.
Right.
So
What is the purpose of this portfolio? You are a very conservative investor, is it?
Yeah, madam. Actually, I'm going to retire after 2.5 years.
Okay.
Yeah, that's why
Okay. So you want this portfolio to act as your retirement fund corpus also? You want regular income from this portfolio?
Yeah, yes, madam.
Okay. So Aditya, how can you help him?
Ma'am, since the investor is approaching his retirement, rightly he must park his funds in debt products. A better debt product would be a senior citizen savings scheme where he can get 8.1% interest rate and he can park 15 to 30 lakh rupees there. Here, since the investor is already invested in all of these funds, the return has been lower because over the last 1.5, 2 years, the interest rates have been lower. As the interest rates continue to keep moving up, the investor should not find any problem as such. I will not suggest a conservative hybrid fund. If the investor wants to invest a little bit in equities, he can go on to an aggressive balanced fund, HDFC balanced fund or a DSP balanced fund. Other than that, all the other investments that the investor is holding, he can keep continuing to hold on to these investments, and he can expect a little bit of higher returns as time passes and interest rates continue to keep moving on. So allocate a little bit of amount to a senior citizen savings scheme. Other than that, from the conservative balance fund, move to aggressive balanced fund. Other than that, hold on to all of these funds will be my advice to you.
That will be all on the time today. Thank you so much, Raman Kumar, for sending us your query. Aditya, thank you so much for removing time, helping our viewers with their financial portfolio.